how to never get denied again for a business credit card. Look, we both know the frustration of applying for a business credit card and getting denied, right? It could be deflating. It could be upsetting in the fact that we don't know why we're getting denied. So we're going to fix that in this training. I'm going to decode why you're getting denied and exactly what you need to do to fix it, to give you the peace of mind to apply and know that you're always going to get approved. Look, we got a lot to cover, so let's dive in. So the first thing to know to stop denials is that there's two main types of business credit cards you're going to be applying for. There's business credit cards that base their approval on your personal credit quality, and there's business credit cards that base their approval on your business credit quality. So this is the first thing to know. When you're applying for a credit card, you should know which one of these types of credit they're using to actually qualify you. Now, there's a couple ways to do this. If you're working with Credit Suite, we already tell you this. Part of our fundability system maps all of this out for you, telling you exactly where the cards are poor, where they're getting their information, and everything else you need to know to get approved. But if you're doing this on your own, then you first want to ask the credit card issuer before you apply a couple questions. Where are they looking? What bureaus are they pulling to make their approval decision? And where do they report the credit that you're actually given? Now, you're going to typically be given two answers. First, they're looking at your consumer credit reports and oftentimes reporting that credit on your consumer credit reports, or they're looking at your business credit reports and they're reporting the credit they give you on your business credit reports. Then if they're looking at your consumer credit to make the decision, then your consumer credit quality is primarily what drives the approval. Look, think of it like this. Credit cards are unsecured, so this means that there's no collateral required for approval. So your approval is not based on assets, it's not based on collateral. Now, business credit cards are also no doc. You're not supplying documentation to get approved. You're not supplying P&Ls and balance sheets and bank statements and tax returns. So that means your approvals are not based on revenue either. This means that your approvals are primarily driven based on your credit quality. So if you're applying for business credit cards that are looking at your consumer credit reports to make decisions, then your consumer credit quality either needs to be good, or you need to be focused on credit cards that are subprime that don't require good personal credit to get approved. So for example, I'm going to avoid, if I have credit issues, Bank of America, Chase, Barclays Bank, all the major banks, and instead I'm going to look for more of a subprime option like a Capital One Spark card that maybe only needs a 600 or 620 FICO score for approval. So the first thing, we've got to know where they're looking, consumer and commercial credit. If it is consumer credit, are we applying for a prime credit card or subprime credit card? You can oftentimes find that right on their application page. It's pretty obvious when you're applying for a major bank versus when you're not. The next thing is that do you have the credit quality to get approved? And subprime credit card in the business world is going to require a 600, 620 FICO score. A prime credit card is going to require a 700 type FICO score. So you need to make sure if you're applying for credit cards that are looking at your consumer credit quality to make decisions, that your consumer credit quality meets those standards for subprime or prime. Now, let's look at the other side of the coin. Let's look at credit that they can give you that's based on your business credit quality. Now, approvals here are all based on how many accounts you have on your business credit reports and, of course, how you pay your bills. Now, the good news is that your business credit scores are based just on how you pay your bills. So if you get accounts that report to the business credit reporting agencies and you pay those on time or early, that's all you really need to have really good scores. But a lot of your approvals are based on how many accounts you have added to your business credit reports. The more accounts you add to your business credit reports, the more tiers of credit you get approved for. Credit Suite invented the tiering system decades ago. And the tiering system basically says, hey, these credit issuers will approve you if you have 3 accounts in your business credit reports. These require 6, these require 9. And this gives our clients a guide to only apply for credit they know they're going to get. If they only have 3 accounts in their business credit reports, they don't want to go apply for a credit card that requires 6 accounts on there. Now, as long as they're only applying for accounts that require 3 accounts of their business credit reports for approval, they're always going to get approved. The same thing if they have 6 accounts or 9 accounts, or even the top tier, which is 14 accounts where they can get almost any kind of credit and auto financing out there without a personal guarantee and without a personal credit check. So a little bit of online research and even look at our YouTube channel to learn more about the tiering system and what to apply for when in the process. Or if you're a Credit Suite client, it's easy using our Fundability system to know exactly what credit you can get at any given time, because Fundability plugs in with the reporting agencies and is populating and producing information for you to only show you sources that you know you can get approved for. So that is the key for business credit approvals. You can't apply too early in the process. You can't apply for credit that requires more accounts on your business credit reports than you have. Great news. All you need to do is continue to build your business credit. As you add more and more and more accounts to your business credit reports and scores, that will be the key to you stopping denials when you're applying for accounts that are just looking at business credit quality to make the approval decisions. Now, this brings me to the second part of this process. Now you know to determine if they're looking at consumer and commercial credit and what's needed for each of those paths. Now let's talk about what lenders and credit issuers are really looking at. Now they call this fundability, and fundability is basically like the secret standards that credit issuers have that they use to determine if you should be approved or denied. This ultimately has to do with 120 different factors, all of which are tied into our fundability software that helps business owners build business credit. But the most important part of fundability is called Fundability Foundation. And this is basically how your business is initially structured. More than half of all denials happen because you don't meet these basic fundability foundational requirements that credit issuers have. You meet these, you get past over half of the denials that take place with credit cards. Then, if you use the other part of the strategy of determining whether they're looking at consumer and commercial credit, you're almost going to eliminate all denials. So let's look at some basic foundational items that credit issuers are looking at. Do you have an entity set up? Is it an LLC or a corporation, which is preferred? You should have an EIN number for your business. You should have a separate bank account for your business, a license for your business. Your business should have a separate address that is a real business address. It should have a real business phone number, even a toll-free number. Your local number, if you have one, should be listed in all the local directories like 411 and anywhere else it could be listed. And everything needs to be congruent. You need to make sure that all the information for your business, the same on the application, is the same as what's on Secretary of State, the same on your Google Business Profile, the same on your website. You get the idea. It needs to be listed congruently everywhere. You need to have a professional website, even a professional email address, and that website really needs to reflect what you do. If you do these things, then you have a strong foundation. Then if you move forward and look at the type of credit you're applying for, whether it's business credit quality based or consumer credit quality based, then you can find the right sources to apply for and eliminate denials and get a lot more approvals. Now look, if you need help along the way, there's two things you should do. First of all, grab our step-by-step business credit building guide. This has been downloaded over 1 million times. It is the most popularly downloaded guide that exists in the business credit world. And it's at creditsuite.com/EIN. The second thing is talk to us about the fundability system. You can easily do this with our coaching and with software cheaper than you trying to do it on your own. So to talk to our team more about that, you can schedule time at creditsuite.com/consult to get a 100% free finance assessment. Did you get value from this training? If so, make sure you like and subscribe and keep your eye out for the next training. We talk about more cool ways to get the money you need to start and grow your business.